Carol Portman, thank you for joining us on the Illinois Channel.
Thank you. Thank you for having me.
You're the president of the Taxpayers Federation of Illinois, and before we get into some of the issues, why don't you tell us what is the Taxpayers Federation of Illinois and what is it that you do?
Sometimes I like to say we're a tax geek organization. We do research and advocacy in the areas of state and local tax and fiscal policy. We do a lot of maybe educational work, both educating our members, which tend to be either businesses or law firms or accounting firms who are interested in state taxes, educating them about what's going on in Springfield or about what the Department of Revenue is doing, the latest trends or the latest developments there, because we're active in Springfield in a way that individual businesses or law firms or accounting firms tend not to be, yet their specialists want to know what's going on. And then we also educate legislators and the media about state tax policy and about the specific consequences of a particular provision, either a proposed or existing one.
You know, I don't mean to suggest that lawmakers are uninformed, but some people might go, you educate the lawmakers on tax policy?
How's it going?
We would have, well, they might think, well, we would have thought they knew tax policy.
Well,
to what extent do they, and to what extent is their knowledge incomplete?
It's a mixed bag. The good news is that they all are down there, and I say down because I'm coming from the Chicago area myself, but they're all in Springfield because they want to do the right thing and they want to learn, and some of them are accountants or lawyers who know a lot about taxes, and many of them, though, aren't. And a lot of them came up in their government service maybe from a local government perspective, and so they understand property taxes because that's a big part of local government finance, but they maybe aren't as familiar with income taxes or sales taxes. And the tax code in Illinois is pretty complicated, and so the finer details of income tax apportionment or sales tax sourcing is something that a government official is not necessarily, an elected official isn't not familiar with. And so the intersection of that and well, what is good policy when you're talking about how much of a company's income is attributable to Illinois? Well, that's where we come into place. Yeah, the big picture policy things that I would think that they are pretty familiar with.
Now, which I know, first of all, you're a nonprofit organization,
That's
right?
right.
Are you a
That's
501c3?
C4.
C4. So with the C4, you can advocate for certain positions? Is that how that works?
Yes,
Okay,
yes.
I just want to make sure.
We don't have a PAC and we don't lobby in the sense of someone calls us and says, hey, I like this bill, go get it passed, or I don't like this bill, go kill it. But we do advocate with legislators.
You might stand at a press conference in support of a bill that would do something that you think is good policy.
Right, exactly, or testify at a hearing. And then, of course, our membership calls us and says, hey, I read about this and I'm nervous, or, oh, hey, this would be really good for our business or our industry, and here's why. And, of course, that informs when we're then talking to legislators or at a press conference or whatever, saying, you know, these are the consequences, the real-world consequences of this particular proposal. Not naming names or saying, you know, this helps this company or that company, but more big picture, this is how this is going to impact the real world in a larger context.
Just so I'm clear, too, on your mission, do you look solely at Illinois, or do you also look at the federal government and the implications on Illinois of federal tax laws?
We stay out of the federal side. We really are just state and local only, which is enough.
Do you meet, here's what I'm getting at. Do you just look at the fishbowl of Illinois, or do you also meet with counterparts from other states and go, you know, Idaho has a great tax idea that we ought to adopt here?
Well, actually, next week I'm going to be going to a conference of other tax geek people just like me. There's California Taxpayers Association and Iowa Taxpayers Association and Idaho Taxpayers Association. Not every state has a group like ours, but a lot of them do. And we get together once a year to...
Do you find little nuggets of, hey, that's a good tax policy or something?
It is fascinating. Sometimes we'll talk about bad ideas that somebody has seen. And just a year ago at this conference, I turned to one of my friends there, and someone was describing something that was happening in their state, and I thought, oh boy, I'm glad that we're not getting that. And I spoke too soon because we saw something very similar coming out in the legislature the next spring, or so this past spring. But it is good things and bad things. We share information about that. But yeah, we don't look at, other than to keep track of what's changing at the federal level so that we know there's going to be a state consequence to something or another, so that we're able to make sure our members are aware of the state consequences, and if it's a federal provision or mandate that might require some changes at the state level, we keep track of those as well. But
I want to get into some specifics, but let me
Sure.
throw out a big picture question first. If you were giving a grade to the Illinois tax system that we have, statewide, what grade would you give it?
Yeah, that's an interesting question because I'd probably give us a C. We do some things right and we do some things that are kind of a mess. So I think from a tax structure overall picture, I probably would give us a C.
And
I've never really thought about it in that way. So
what are we doing wrong? And I'm thinking, I'll tell you, I'm thinking in terms of Ralph Martiri's the Center for Tax and Budget Accountability. He would argue that we have a 1950s tax policy. We're taxing widgets.
right, and not no,
and manufactured goods, so that if I go buy $25 worth of, if I go to a bar restaurant and get $50 worth of food, I'm going to have a tax on that.
Right.
If I go to a hairstylist and pay $50, there's no tax on that.
That's exactly
And it says,
right.
why should the hairstylist get all the benefits of society and not be charging a tax for their services?
Ralph, the CTBA is exactly right on that point. Most states, I mean, one of the things that we do right is that we have a number of the big taxes that most states have. We have an income tax, a sales tax, a property tax. We aren't overly reliant on any one tax because we have them all. I think we are overly reliant on the property tax compared to our peer states, but it's not because we don't have a sales tax or we don't have an income tax. It's just we have a higher property tax. But on the sales tax front, a good tax has a broad base and therefore can have a low rate to generate the revenue you need. And then if you've got a broad base, as the economy changes and evolves, like Ralph says, your tax base keeps up with the economy. I mean, we came out in conjunction with the CTBA on one of the studies they did. I guess it was about a year and a half ago. We were on the paper talking about the need to expand our sales tax base to some services. So that's an area where we fall
So you
behind.
wouldn't make it across the board?
Well, you can't. A sales tax is supposed to be on the final consumption. When you went to the store and bought this pen, you paid sales tax because you were going to use it. But when the store bought the pen from the pen distributor, they didn't pay sales tax because they were going to resell it.
Right.
And when the distributor bought this pen from the manufacturer, they didn't pay sales tax because they were going to be reselling it. And when the manufacturer bought the pen parts, they didn't pay sales tax because they were going to be putting into a pen and reselling it.
So if it's business to business,
Exactly.
it should not be taxed
Exactly.
because that's all part of a
There's going to be
end product.
Exactly.
And the Europeans
The
do
value-added
tax every step along the way, which is the value-added tax.
But they provide an input credit for any tax you paid on your inputs. So the net effect of the value-added tax is that the only thing that's taxed is the incremental added value. So when the distributor buys the pen from the manufacturer, they do pay tax on the full purchase price of the pen. But then when the distributor sells the tax to the retailer, or sells the pen to the retailer, they get to and they collect the tax, but then they get to offset the amount against the tax that they've already paid.
Well,
so they only pay the tax on the net
We won't worry too
difference.
much about the value-added tax. I don't know
That's a mess. That would be impossible.
I don't know anyone's going to go there,
No, we
but
would.
but that we should. You would argue we should expand the sales tax to some services.
But it's really hard to do.
What should be the goal? And by that, if we expanded it, would we do it to bring in more money? Does the state need more money to operate? Or do we expand it but then lower the current tax rate so that it's revenue neutral but it's more fair?
That question I kind of goes beyond our policy worldview. But it's no secret that our state is in a huge fiscal mess. And most folks agree that while there probably is some opportunity for closing that gap, here's our spending and here's our revenue, that gap, there's probably some room for some spending cuts to close that gap. But pretty much universally everyone agrees that at least for right now and for the foreseeable future, we're going to need some additional revenue. So in this instance, if we were able to broaden the base in a meaningful way and do it fairly and do it in a way that, part of the problem, it would be really complicated. Because we've got, sales taxes are complicated in lots of
Which
ways.
we'll just take your word for it, because I don't want to get stuck
No,
into the
because we'd be
minutia.
here forever talking about how complicated.
They're complicated in the, it seems simple, the way they're collected.
Yes,
It's, let's say
yes.
7%, you add 7%.
Right.
But the way they're distributed
Gets
is
very
part of the
complicated.
complexity.
Exactly.
Because some will go to the local community, some
Yes.
might go to the county,
Right.
some might go to the state.
And so then
etc.
it depends on where you bought your pen, who gets the tax, and that can even get complicated when you're buying pens. But if you're buying services, then where that service purchase occurred gets even more complicated if it's a remote kind of a service. So that's the kind of complexity. But the point is, you could do it, broaden the base, broad-based low rate, and we do have a fairly high rate in Illinois on sales taxes when you're downtown Chicago.
What is it, 10%?
It's over 10, yeah. When you add in all the layers of tax. The rest, downstate, where it can be as low as 6.25, that's probably fairly average for
When you
the
compare to
states.
other states.
When you compare to other states, the weighted average in Illinois, of course, is higher again because so much more commerce occurs in the higher tax jurisdictions. So our tax rate overall is fairly high.
Do you do studies so that one of the arguments about the sales tax in Chicago, which you brought up, people would say, well, if I'm a car dealer in Cook County, and then let's extend it to Cook County, no one's going to be buying my Cadillac for $50,000 when they can save and have a lower rate.
No.
Have you ever done studies to find out who was right in that discussion? Did the
We
the sales
haven't.
fall off as a result of tax?
We haven't done those studies. There have been studies done, and the results are mixed. There is, without a doubt, some forum shopping, jurisdiction shopping. I mean, you drive back and forth between Springfield and Chicago from time to time. Do you fill up your car with gas in Chicago?
No.
Nobody does. And so those
Because
sorts of,
it's always going to be, 50 cents or 60 cents a gallon higher.
Exactly, and it's mostly for the taxes. So that that's happening. It's really hard to quantify how much of those kinds of decisions are made and what the consequences of them are. We know it happens. Everyone agree it happens. How much? So if you raise your tax by 1% in a particular town, would you of course wouldn't get that full percent of recovery, but when you don't get that full percent extra, is it partly because people aren't buying in your town anymore and they're going across the town line to buy elsewhere, or is it because the guy across the way had a sale, so it's really hard to do. Like I said, the official studies, the academic studies are kind of mixed on that.
Let's get into some of the other areas, and with voters, as we tape this, the election now is less than a month away. One of the issues on the ballot will be a constitutional amendment. They call it the Safe Roads Amendment.
Mm-hmm.
It is simply saying you're collecting gas tax and other taxes that are supposed to be going and are advertised as going to the road fund to maintain our infrastructure of roads and bridges, etc. And yet you legislators over the years are taking that money and spending it on other programs.
Right.
I will say, as the federal government has with Social Security money. They've taken that. They really haven't. There is no trust fund funded
It's
in
not a
Social Security.
lockbox like Al Gore
There's
used
no
to.
money left on that in that pantry. So this would say you have to keep that money there. It basically is a lockbox, to use the famous Al Gore line. Is that good policy or bad policy from your perspective?
I understand the rationale behind it. I think that it's been frustrating to see our roads deteriorate and the quality of the roads and the bridges and things in Illinois, and to know that this money that's being set aside for that purpose has occasionally been repurposed. It is unfortunate. On the other hand, I'm not sure a constitutional amendment is the way to fix that problem. Putting it in the Constitution ties our hands if there's an emergency, if there are other needs. And
this amendment doesn't allow for an emergency.
no, it doesn't. It also basically says here in Illinois, roads are more important than schools. Roads are more important than other types of public safety efforts. Roads are more important than anything else, because the only money that's protected like that is road money. It forces a prioritization that's supposed to be part of what the legislature does.
And to that point, the legislature, before Governor Rauner came in, the legislature was taking money out of education. They had what they call a foundation level,
Right,
that
and
no
we
one's going to
have
get less per pupil than
Right.
this,
And
but
but
they
we-
weren't funding the
right,
foundation
right,
level.
they
They
were
were
funding
down to
less.
about 89% of that
Exactly.
level.
No.
So
That reflects part of the problem is, here's been our spending and here's been our revenue, and most people think that, specific, education advocates think that the spending on education should be here, and roads advocates think that the spending on roads should be there, and the revenue is still down here, and so the advocates for those particular causes have very legitimate points. I mean, the foundation level, most people believe, is sort of the bare minimum, and yet the state isn't even allowing that.
I think now they
that.
are. I think with
Yeah, then they did bring
Governor
it up.
Rauner's increased spending, so they're where it was supposed to be going back a number of years.
Right. But so what this does is says, legislature, we don't trust you, which is a legitimate emotion because they have been taking this money and moving it around. But instead of fixing the bigger problem, this just
And what is the
creates-
bigger problem?
Well, the bigger problem is here's our spending, and here's probably where we should be spending if you believe the people who advocate for the specific programs that are in our spending, and here's our revenue. And instead of...
So some would argue, of course, you cut, and some would say you need more revenue.
Right. But what this is just saying is we can't, it doesn't touch the revenue. We could zero out all of our road taxes, all of our motor fuel taxes, and all of the things that go into it. I'm troubled by this as a constitutional provision, and I also think that the measure was drafted by some very well-meaning folks. I mean, I understand what they're getting, and our roads are bad and need some help, and it's got to be frustrating to people who see this money and see it not being spent where they know everyone believes it's supposed to be going. So I don't mean to disrespect their desires, because they're legitimate. But the technical language of the way the amendment is written didn't get a lot of scrutiny early on because no one really thought it was going to go anywhere. And there are lots of constitutional amendments that get introduced every year, and this was just one of a bunch of them that just kind of sat there until all of a sudden it was moving. And I have some concern that in addition to the gas tax that everyone refers to that's currently being set aside into the road fund, and all they intended was what's currently being set aside into the road fund, but the way the language is written, a lot of other taxes that are associated with the sale of a car, the sale of new tires for your car, the sale of new windshield wipers for your car, those taxes could arguably also, based on the language of the provision, go into this lockbox, which they don't today, and it would require, that would be kind of a complicated thing if that's the case.
Well, and there could be some, it sounds clear to say the road
Yeah.
fund, but then does that mean we can work on a railroad bridge that's going over a road, or can we spend the money on?
It's transportation purposes,
Okay.
and it's a fairly well thought out. It's not like it was just slapped together at the last minute by people, but it still has. So it's intended to cover all types of transportation. It doesn't have to just be roads, and it's also intended to cover the associated administrative. It doesn't have to just go towards buying the paying for the
asphalt.
the
and stuff.
asphalt, and the guy driving the truck or the woman driving the truck that's putting the asphalt down. It can also cover some of the other associated expenses, but it's still it's not the kind of thing that should go in a constitution. Although I understand the frustrations and
I don't know. It would be interesting if we could have a constitutional amendment that sunsets.
that is you could.
Because we have a great deal of problem right now. Part of the whole fiscal problem, in fact, perhaps the majority of it, is the rise of the pension cost.
Right.
That is grown and grown and grown and devoured parts of the state budget. And this is why they only have areas, most people don't realize that there's only a few really big ticket items, education being one. And so if you say, well, the kids come first, well, then you're not going to have the money for the pensions.
Right.
One of the ways that we also hurt ourselves, and I'm not sure why the legislature did this, they did increase the income tax but they had that sunset.
Yeah, yeah.
So that was what, it'll be, I guess, 2
2011.
years ago it went
Yeah.
off,
Right, it
from
went off.
January or something.
Right.
That cost the state, I believe, in the area of what, about $4.5 billion?
Yeah, no, that was a pretty significant drop in the revenues at
Now,
the time.
A lot of people would argue, put that back. We need the $4.5 billion. It did not make Illinois uncompetitive compared to other state income taxes that surround us. People might move out of Illinois for a variety of reasons, and in fact, a recent poll that just came out the other day said 47%, it's a huge number,
That's huge.
are looking to move, and they said the number one reason is with taxes. But it wasn't the income tax, I believe. I think it's, and maybe we should get into this now, the property tax. The property taxes in Illinois are a killer, are they not?
That is true. Illinois, as a whole, has one of the highest property tax burdens of all states. Depending on how you can run numbers in different ways, but we're always top 5. Sometimes we're number 1, 2, or 3, depending on how is it per capita? Is it based on state GDP? How do you weight? What kind of weighted averages do you use?
Well,
We're still very high.
I live just outside of Springfield, Illinois, in a nice neighborhood. My house value would be in the neighborhood of about $300,000. The taxes I pay, if I were paying that much tax in St. Louis, my home would be approximately $800,000. So that's how high
Yeah.
the property
Yeah.
taxes are
Yeah.
in this state relative to
Yep.
other areas.
Well, and it varies a lot within the state too. My predecessor, when shortly before he retired, he moved from the Chicago suburbs in Cook County into the city. He sold his home and bought a condominium for roughly the same amount of
Value.
value, and his property taxes dropped to about a third.
Wow.
The residential property taxes in the city are dramatically less than in the suburbs. So it depends on where in the state you are too.
On that topic, Chicago is perhaps even more screwed up financially than the state.
Oh, I don't know more, but Illinois, it's kind of a good news, bad news. The state is not the only fiscal basket case,
Well,
the state government within our state, because the local governments are equally.
Some people argue, Ron Sandak would argue, the former state representative, that Chicago would be better off just declaring bankruptcy and starting over because they don't know if they can get out. Now, others would say, instead of having the state bail out in millions and millions of dollars, the city, why don't you raise your property taxes, which are not as high as they are in the collar counties?
And they have been. I mean, the mayor's plan and to help fund the schools and to help start eating away at some of that unfunded pension liability has included some property tax increases, which of course have been very politically difficult to stomach for the aldermen, but the city council has approved those property tax increases, and the Chicago Public Schools are also, I think,
So they're
gonna be
making
increasing.
some effort to
So they are making some.
make this a little more fair and across the board. They're not there yet. Here's a question I probably should have started off with. Given the financial crisis in Illinois, and you are, in many ways, your mission is to be an educational resource. You look at these issues, you compare them to other states, you say what's good tax policy and bad tax policy. What should we do? I mean, if I'm Governor Brown and I say, Carol, if I said you're going to be my main advisor on taxes, tell me what to do.
I'm glad he doesn't say that. It isn't easy, and I think it's the kind of thing that's going to require a lot of pieces. I don't think there's one, all we have to do is X and that'll solve all of our problems. I don't think it's something that can be solved overnight. I think that broadening the sales tax base, maybe lowering the rate a little bit, will help increase.
Because you'll capture some economic activity,
Exactly.
whether
And
it's haircuts or whatever.
Right, and as the economy goes more and more towards services and less towards goods, and it also helps because I mean you could go get your hair cut, or you could go buy a pair of scissors and cut your own hair. And right now, when you buy the scissors, you would be paying tax, whereas if you cut your own hair, you're not. So and even though both cost $50, one's taxed and one's not, even though the outcome is exactly the same, you got a haircut. You should be treating those two things the same. That's a good tax would treat similarly situated things the same. So that's a good thing to do.
With hopefully some carve-outs, like you're not going to charge Billy who cuts the lawn and make him go through the labyrinth of filing taxes.
Yes,
you want to have,
exactly.
or babysitting, Sally
Right.
babysitting.
Right, and that's-
you don't want to have her
Right.
charging tax. you
Right,
know.
and so when you start making those carve-outs, the money isn't huge there, but over time, it should help. When you look at how our state's economy has gone and you look at our sales tax collections over time, when you equalize for
Has
all
our sales tax collection done what? Has it gone down?
It's gone up, but not as fast as the economy has gone up, and that's because
So the economy expands 2%, the sales tax should go up
something
2%,
less. Right,
more or less.
exactly. And
it's
it doesn't do that because it's been lagging the economy because so much of the economy is in the service sector. We don't tax retirement income in Illinois.
We don't retirement income.
I'm switching to income taxes, and if as you're working, your employer sets aside some money for a pension, or is supposed to be, or if you are earning the right to draw Social Security, or if some money's going into a 401k or an IRA, as you're earning those rights to future money, there's no income tax on it as you earn it. There's none at the federal level. There's none at the state level. Then once you retire and you start taking Social Security or pulling from your pension or taking funds out of your 401k or your IRA, that is taxed at the federal level. Not all Social Security, some Social Security is exempt, but everything else is taxed. The pension income, the 401k, it wasn't taxed up front, it's taxed on the back end when you take it out. Most states follow the federal treatment. They exempt it up front, but then they tax it when you take it out.
It's just like an IRA.
Just like an IRA. You don't have to pay that tax on that money when you put the money in. If you earned $50,000 and you put $2,000 in IRA, you only have to pay tax on $48,000 that first year. But then later on, when you take that $2,000 out of the IRA, you're going to pay tax on it then. So you're only taxed once, but you are taxed once at the federal level, and most states follow that. Here in Illinois, we follow the feds up front, and we don't tax it as you're working and when you're setting the money aside, or your employer is setting it aside. But then when you take it out in Illinois, we also exempt it then. So if you are someone who has a very nice retirement plan, you're earning money and you're not paying any income tax. If you don't have much of a retirement plan and you have to go to a store and be a greeter at the retail big box, you are paying tax.
We could tax retirement income, and we could even, again, have some carve-out. You might say any retirement plan that's over $30,000
and you'd still follow the feds and exempt the Social Security that they exempt. They exempt Social Security for certain folks.
Have you looked at those numbers, and if we taxed them, what kind of dollars would that mean to the state?
If you taxed it all and just totally followed the feds, it's over $2 billion a year.
Annually, yeah.
If you carved out of the first 50 or 100,000, obviously that number drops. And of course it depends on the rate, right? I mean, the tax revenue equals base times rate. But in the years when the rate was 5%, we were losing about $2.3 billion a year in
what would have been
in revenue because of that exemption. It's a study that the Comptroller's Office does a tax expenditure study, and COGFA also, they do these, and they calculate. These aren't our numbers. These are from elsewhere in the state government. If you ratchet that back and exempt some, and obviously it depends on the rate, but that's an area that's very unpopular to talk about because no one wants to tax retirees because.
Yeah, but other states do.
Other states do.
And if we're not taking that money, and some of these people are getting really wealthy retirement packages.
Yeah.
And you can protect, the way you write the law, you can protect those.
Absolutely.
You're not going to have
the little
some
lady
lady who can't afford her pharmacy now because you taxed her.
That little lady who can't afford her pharmacy is probably having to work a part-time job to be able to pay for it already, and she's paying tax on that. And her taxes are higher because the rich fat cat neighbor across the street is sitting back not paying any tax on his big 401k withdrawal.
But if you don't do that, then the argument is, well, then you're going to be taking money away from the school kids, which they've done. You're going to take money away from the road funds, which means our economy over time becomes less efficient. We can't have as many trucks on the road, or it takes them longer to get from A to B, right?
Yep, and that's the problem. I mean, there is also this concern that those wealthy retirees can just pack up and leave And of course they can, and like you said, there's a lot
But
of
if
people.
they're getting their retirement from the state, couldn't that be taxed irrespective of where they live?
You could. There's federal rules about which states can tax retirement income, because states used to get, about 15, 20 years ago, states were getting really aggressive and saying, you worked here for a week, we get all your retirement even though you live there now, or we get to tax it. So that gets, it's hard, that would be tough to do.
This is
but-
probably like everything you want to know about taxes. We're afraid to
that's a
ask, right?
super geeky thing, but I happen to know that.
Let me say before we could go, and one thing I want to just work into, because we often hear, those of us who follow public policy, that Illinois has more units of government than virtually any other state, and it's, I don't know what the number, it's in the thousands.
It's in the thousands. It depends. No one knows what the number is because it depends on how you count it.
And each one of those units of government, and that doesn't mean it's a city, it could be the library, a local library that taxes homeowners a nickel a year or something.
Right, right.
What should be done about it? Is that a problem? And if it's a problem, what's the problem?
Well, there's a number of problems that are associated with that. First, there can be instances where, because there's so many of them, no one's paying attention. And so you can run into the occasional situation where there's some actual fraud or abuse because no one's paying attention, because, who looks at their library district? I don't care. So
There was some I don't know if it was associated with this. The College of DuPage had some issues,
yeah.
and that might have been.
That probably doesn't happen all that often, but it's a greater risk. I mean, voters, I don't know how.
There's too many units for anyone
When I
like
go
the
to
comptroller or
vote,
the treasurer to be able to keep their eye.
Who's on the school board, who's on the park district board, who's on the library board, who's on the county board. You have sanitary and sewer districts. There's a whole host of those kinds of groups. And it's too much. Local government is great because it is more accountable to and directly connected to the taxpayers. But you get overwhelmed when there's too much of it. It's almost, we have too much of a good thing. So the accountability is lost. And to the extent there's duplication of services, to the extent there's inefficiencies, because each one of these is so small. In the town where I live, the park district and the library district and the village have the exact same borders. But there are separate taxing jurisdictions, so they each have their own elected board, and they each have meetings, and they don't have to fight over funds. They each just raise their own without, the tree huggers and the jocks support the park district, and the bookworms support the library district, and they don't have to duke it out. They can each just raise taxes on their own because it's what they care about and what's important to them. I care about books and trees, so I don't mean to diss either group, but you lose some of that ability to prioritize when each one has its own separate.
Well, isn't this a little bit of the same problem that you were talking about with the road fund, in that if we're taking money and we're saying this is going to the park district, this is going to the library, this is going to some other little function, they might all be worthy, but in any given year, we might need to have dollars if it was just a general revenue fund. It's kind of anti-democratic, because if you have elected bodies, whether it's the county board or the city council, they might say, this year we're going to increase spending on roads, next year we're going to spend money on something else. And you can't do that if the monies are dedicated for all these different funds.
That's exactly right. And it's definitely inefficient. You hear about there's a lighting district in Naperville that had 77 light poles, and they were imposing a tax. And they didn't have a way they wanted to get rid of it. They wanted it to go away, and they couldn't figure out how to make it go away. There had to be a state law passed to allow them to
close it out.
To close it out and transfer the operation, because there's these light poles, and they weren't in incorporated Naperville. They were in unincorporated Naperville, so they weren't part of the normal village responsibilities. It was a big deal to take care of these 77 light poles. 40 years ago when they built,
people hate government.
40 years ago when they built the subdivision, because they were the people wanted a
there was a purpose, but it went out of it. It outlived its purpose.
Exactly, and they still want the lights, but they just there was no need for a separate government unit there. There's been a slow but hopefully increasing snowballing effort in Springfield to start allowing creating the format for these kinds of government units to go away if they want to consolidate with another one, if they want to combine, if they want to collaborate. I mean, one county health board, if they're specialized in vaccines and this county health board is really good at testing, they couldn't cross the county line and the vaccine guys,
Even if they were across the street from each other.
yes, they couldn't coordinate and, all right, you use your vaccine specialists and we'll use our testing specialists and we'll, work together. They couldn't do that until recently.
To what extent, we won't go on much longer here, but to what extent when you talk with lawmakers, state lawmakers, do you have an acceptance of what should be done, or do you get a lot of, I know we need to tax more, but I'm not going to do that because it would be politically suicide?
It's a mix. I mean, we're certainly not advocating for taxing more. We're just saying when there should
be a better system.
That when there's this big of a gap, you need to tax more. Here are some ways to do it that don't cause us to go out of whack with other states. I think most legislators understand that need to raise revenue and certainly understand the budget gap.
I don't know if you've recommended, would you recommend that we go back to the 5% income tax?
We haven't come out with a statement on a proposal on that, and I think
because the other point of this is if the state, we might have somewhere by the end of the year, I've heard different numbers, but it could be $10 billion that the state owes. Well, that's $10 billion of bills that aren't paid, $10 billion that isn't circulating to any number of people who have their own employees.
Oh, exactly.
And then buy products and goods and services from other businesses.
I'm sure you've read the stories of the layoffs and the organizations that the state owes so much money. They've had to stop doing what they're doing.
Then the landlord isn't getting his rent.
Right.
So I mean, it's not to say, don't raise it because it'll hurt us. We're being hurt either way.
Right.
Is that right?
That's true. And the uncertainty. Everyone knows, and most business people know, whether they're based in Illinois or elsewhere, we've got a fiscal mess here. And there's an assumption that someday we'll fix it. But the problem is no one knows how that fix is going to be, what it's going to look like. And so there's the unpredictability and the uncertainty of what our tax structure and fiscal situation is going to be like is driving people, making it difficult for them to get comfortable investing in Illinois or coming here. I've talked to people who say, we were trying to hire someone and he was reluctant to move to Illinois because of our fiscal situation. I mean, I don't think there's a lot of that happening yet, but that's the kind of problem that we need to fix it, and it's going to be difficult and it's going to be awful. And so the political
and it's very complex.
And
right?
it's kind of like I said when you asked at the beginning, there's not one silver bullet that we can do. There's lots of little things that we could do that would help raise some revenue. There's some things that we could do to tweak our tax code that might not cost us much of anything, but make it more competitive with other states and more easier for the department to administer and easier for the taxpayers to do the returns even. So there's things like that we could do, but it's not going to be easy, and it's not the kind of thing that anyone wants to talk about a month before an election. So. We aren't having these conversations at all. I'm not even trying right now because it's not the right time for this.
Before we close out, if people want to, we've talked about so many different topics here.
Mm-hmm.
If people want to get more information, are some of these topics broken down on a website that they could go to?
Well, we do have a website, www.iltaxwatch.org. It doesn't have a lot of this kind of things. We've put out a book called Illinois Illustrated that has a lot of really nice graphs and charts and things, and you can get to that from there. But so if you have specific questions, people can always call me or email our office and that stuff, that the contact information is on our website.
It's on your website.
Yeah.
Last question, when you were here in an election, we're going to be having lawmakers, some new people undoubtedly.
Yep.
Is there any formal getting together of new lawmakers and say, sit down and, I don't mean it in a pejorative sense, but sit down and let me explain to you the tax policy.
Stand at the blackboard and spell out.
Which might be helpful to them, I would think.
The Legislative Research Unit in Springfield does a training, and they have a tax session there. and they do it themselves and aren't interested in any outside help. What we do is send out a packet to all new lawmakers, and actually anyone who gets reelected, just kind of saying, welcome to Springfield or welcome back to Springfield. Here's some basic information about Illinois' tax code. The Illinois Illustrated booklet goes in there, and then some of our tax policy statement of principles and some things like that that go out there. So we do communicate with them that way. We've talked about having actually I thought about doing it right after the primary. So once the candidates had been identified, but before they'd come out with too much really hard specific policy positions in the campaign.
And then they painted themselves in the corner.
Exactly. Educate them first before they accidentally say something that in hindsight they shouldn't have. That's too hard to do, and the political parties, I don't think this is an environment where we'd be able to get buy-in on that. So we didn't do that, but we do make a point of going around and introducing ourselves so that people, if they have tax geek questions, they can call us.
Okay, and hopefully this conversation will, for
Might
those
help.
who are interested, will shed a little bit of light
so.
onto some of the issues.
So.
But Carol Portman, we thank you for joining us.
Thank you. Thanks for having me.
Okay.
You're watching the Illinois Channel, an independent nonprofit corporation formed to provide gavel-to-gavel coverage of Illinois state government and other public affairs events taking place across Illinois.